Everyone, welcome to a brand new episode of the Outlier Podcast. Today I'm hosting from Vegas over here, and I've got Dave with me. Hi, Dave. How are you doing, sir?
How are you doing?
A lot of travel. That's came in last night, pretty late. So yeah, it's a morning to start with when you come for events and work. But yeah, all good. At least warm weather, not chilling like New York. So I would say it's all good. Thank you for asking. Quick introduction who Dave is. Dave is Chief Lending and Experience Officer at Consumers Credit Union based in Illinois. Dave has been in the financial services ecosystem for more than 2 decades. So, with majority of his stint in credit unions, with some bit of stint at Wells long time back. But that's who Dave for us is. Dave, I don't know if I did even half enough justice to your introduction, sir. Feel free to add something else if you want to.
I think great introduction. I've been with Consumers Credit Union for 11 years now. Really enjoying it, keeping me busy. I'm excited to talk to you a little bit more about a variety of topics here today.
Absolutely. And sorry everyone for a horrible background because I'm in a hotel room, so I can't do a better job than this. This is the only place for the podcast. Sorry about that. Let's quickly start, Dave, with your journey, right? So, Dave, you want to talk about your journey. What has been your journey so far and what has led you to becoming a CXO in a large credit union?
So, as Anurag did the introduction, had the pleasure of working part-time and over breaks while I was in even high school and college at a credit union, BCU. And at the moment I started there, even though I was alphabetizing, I think my first day in a vault, titles, the time I got to spend speaking with members and helping them solve problems in their call center, I saw that this is something I really want to sink my teeth into and just continue to stay connected through college, and then was able to get some full-time work, as Anurag mentioned, a really brief year at a bank, and realized this isn't the way I think that people should be treated with their money and different opportunities. A term I've heard in the past and really saw it there that one year at the bank. Banks use people to make money, whereas credit unions use money to help people. And at that moment, I knew I got to get back into credit unions after that year. So I joined Motorola Employees Credit Union at the time. They later rebranded to Andigo. I spent about 5 years there and then moved over to Consumers Credit Union and been there ever since. So that's been the journey. And when I started at Consumers, it was mainly in marketing and sales. And over the course of more than a decade, there's different organizational changes, opportunities that have come up, and kind of found myself into the Chief Experience Officer, Chief Lending Officer role that I'm in today.
I mean, because your role is not just experience and lending, you also lead marketing. You do a bunch of things, right? So my next question, Dave, is on your current role, right? Since you have a very broad charter, pretty much, when someone leads and owns, lending, experience and marketing, my question is, what is that one hard trade-off that become visible that others really miss because you are like across the ecosystem running bunch of things all together?
Yeah, it's a delicate balance, right? So I have a really high performing team, very experienced leaders that are running all those different business units that you're mentioning. Time ebbs and flows. It's similar to parenting. If you have more than one child, sometimes you might need to spend a little bit more time with a certain child or your spouse, partner, etc. So it's very scenario based. So when teams are going through transformation, or there's some type of turnover, or if we're starting to fall behind on certain budget goals, that's kind of my cue to, hey, I might need to listen and give this leader or that team a bit more time. But it comes at a cost of other groups not having as much time and visibility. So I think having an understanding of the business units that you oversee, like I said, know enough to be dangerous, and then also staying really in tune with your leadership team on a regular basis, just quick check-ins. How are things going? Is there anything I can help you with? What's keeping you up at night? Just quick questions like that usually can surface an item that may be challenging for them, that you may not be able to necessarily help them, but at least you can kind of get them guided on a path to improvement.
I mean, that's a very well structured way of looking at it, right? Because you cannot, conquer the entire world alone. I'm a huge believer of this concept by Steve Jobs that you can only be as good as your team. It means you should always hire people who are smarter than you. I mean, I usually hire people in my team who are like way smarter than who I am, because the sum total of smartness in the room always increases and you do a better job. I mean, what you're doing that really makes sense is across this. Nice. Now, Dave, since you run experience, right? So I mean, I'm sorry to say, take it with a pinch of salt. 50% CXOs I meet, I ask a question that, how do you measure experience, right? Not 50, at least 30% of them still tell me it's NPS. I'm like, yeah, that's 1990s, right? Let's move ahead and let's do something else. So let's say if I were to ask you, how do you measure experience in your credit union outside of NPS?
Outside of NPS, there are other surveys that we do through post transaction. So think of someone recently chatted or had a call with a contact center rep, visited a branch. But those are really reliant on that person responding, right? So you still have what is going on with the 90% plus that aren't responding. And we're looking through our call and chat data to figure out why are people contacting us, because there must be an issue. So that is a way for us to see sentiment, both positive as well as negative, and spot issues. So that's more tactical, but as far as measurement, we recently introduced a complementary metric that we call it consumers net organic member growth. And we feel if you are doing a good job, people are staying with you and increasing their level of participation with the credit union. So when we say organic member growth, it's not just the direct members that we attain through traditional
Sure.
marketing, word of mouth. It's also
Sure.
we have a merger as well as an indirect strategy here. And what we want to do is we want to earn the right to earn more business from those pockets of members. So once they add another balance sheet product or service, they are deemed now organic. So our team is really focused on acquiring. And then once we acquire, how can we, the term cross sell, but to me, it's more educate the other products and services that we have. But we have to be doing the right things in that current account relationship to earn the opportunity to get that. So for example, indirect loan, we got to make sure it's easy for them to make payments, understand how to service their loan online. And if we could do that, I think they might be interested in hearing a little bit more about what we could offer them, because it might be a better financial position than they may have on their current finances, such as checking, credit cards, home equity, mortgage, etc.
I mean, that's a thought out strategy, right? I mean, we can obviously deep dive on this further, but in the interest of time, I'm moving to the next question. It's a very well out strategy. In terms of loan growth, because, with the current ecosystem, Dave, it's not only just deposits, both deposits and loans. It's not easy. It's not easy to pick up both deposits and loans, specifically when you have, I'm not naming the large ones, when you have all the top 10 banks, when you have, Chimes and Revoluts of the world getting in, it's not easy. I mean, the ecosystem is changing very fast, and you do not operate in an MSA that's well secluded. You operate in an MSA that is the hotbed, right? Chicago. It's not easy. Cost per acquisition, I'm sure, is very high. It's not easy. So in terms of essentially loan growth, so if you have to pick just one lever to grow loans specifically without compromising on the credit quality, what would that be?
We're really focused on, I think consumers has been known for consumer lending specifically, vehicles,
Yeah.
new and used vehicles, both direct and indirect. And that's by far our biggest portfolio. For us, growing residential real estate is really what we'd like to see more of. And we'd like to be at a level of our originations being approximately 10% of our assets. We have a ways to go there. So that is the area that we have a lot of focus on for new product development, a lot more marketing. We're putting more of a sales force behind that entity. There's a product management discipline that has been brought in to help support that and develop campaigns with the business unit and be a good conduit to the marketing group. So both mortgage and home equity lines of credit. I know you said to pick one, so I'm bucketing those two together. That would be what we'd like to see more growth out of, because if we can help somebody with home ownership, we're really going to be able to get that whole account relationship with people. And also, I think credit unions are just known for car loans. And just as an industry, if people they hear the word credit union, I think they assimilate to that. But what we can do with how much home ownership, the costs continue to rise, it's really difficult for folks to get a down payment, affordability, et cetera. I think we really can make an impact as an industry, on that issue that we have in society today.
Yeah. Now let me flip the coin, right, to deposits. So how do you think credit unions should rethink? Because it was maybe 10 years ago, it was easier getting deposits. Now it's not that easy. So how do you think credit unions should almost rethink the strategy for deposit acquisition, right? And as a growth engine and not just a funding function that you get money and you lend money out. This is a actual growth engine. Unless you have stickier deposits, I'm just forgetting the term. Ron Shevlin, Ron uses this term called the paycheck motel, right? Essentially, it gets in and it gets out, right? So that's not really helping anyone. It's not helping with our interest income, non-interest income. It's not helping us with anything. So what is your strategy right now to both attract stickier deposits and retain them?
That's a great question. I know a lot of credit unions right now are searching for more deposits, specifically more core deposits. So, checking, share drafts, whatever you want to call that. Certificates it's a great funding mechanism to grow and see big balances, but checking and share drafts is really where we want to focus in on too. We've had a flagship product here at Consumers that has gotten some notoriety out with online publishers on our rewards checking account, which in essence is an activity-based checking account. So the more that you use, the higher the level of interest can be. But as rates in the deposit market have risen, and there's these no strings attached kind of savings accounts that you can get 3, if not 4% on, our rewards checking account at the rates we've been paying out, which is 3, 4, or 5%, depending on your activity, doesn't have the same ring to it as before. So we are kind of going, as I like to say, back into the lab to figure out how we can kind of come to market with a different approach to this. And I think for community banks and credit unions, with these different players coming in and upending, the payments space as it is, I think we need to start thinking about it as more of a spend versus checking. So you think about our biggest group of future and current clientele is millennials, so Gen Y, and then also Gen Z. A lot of them aren't really writing a lot of checks, right? So when you hear the word checking, like, what the heck is that? It's more of your account to spend, and then you have a save. So how can you create that ecosystem to allow them to do those things and almost not necessarily dumb it down, but just frame it differently that makes sense for them, and aligning reward structures that they'll find valuable, because paying 3, 4, or 5% on your checking account, which most people, like you said, the moteling, over the paycheck, you're not getting as much on that to be able to pay out a good amount of dividends on. So right now we're in the midst of understanding how we can repurpose our checking account setup so that it's more marketable and it's more, understandable and usable for our current and future members.
Rebranding the new checking account, or you're introducing a new product line altogether?
To be determined. So we need to see what that might look like. It could just be some feature and product changes, or it could be a complete, maybe new product line that'll be coming out. Discussions still need to be had, and the team's been working pretty hard on this, coming off of a merger system conversion we had a couple weeks ago, which we needed to spend a lot of time on and pull a lot of our team members in for, rightfully so.
Understand. Makes sense. Yeah, I think that's what we call the gold standard, right? At least you need to have a really attractive checking account. Otherwise, acquiring deposits, just CDs is not enough. Makes sense. Now I'll ask you about one question that might be, a bit off, but still talking about one decision, Dave. Now we take a bunch of decisions across. Some work, some do not work. At times, for me, a lot of decisions don't work, and that's like 80% of it. 20% decisions work. It's more of a Pareto rule. 80 and 20. 20% decisions that you take really account for 80% of the work. That's what at least happens to me. So what's that one decision you think you've made really did have an impact on member experience and the overall ecosystem, but had a short-term dip? Wrong word to use revenue, but yeah, let's imagine a proxy of revenue, right? But had a short-term revenue impact. And do you still stand by it?
Yeah, great question. So very reflective on that question, Anurag. So one that stands out to me that is working well right now, which is great. But at the time, we did have cost implications, as well as we did have some service impact. So it was kind of a double whammy, double negative on that. It's when we made the strategic investment in rolling out interactive video teller machines, or personal teller machines. We call them ITMs here. And when we did that, it's a really big capital investment. So, it's a big cost. We had to staff a centralized video teller function, and we didn't know if we could see the gains from the less amount of FTE in the branch network. And at first, this took a lot of, we had some bumps and bruises with the rollout. We allowed members to kind of choose their experience. We had drive ups that were half tubes, half ITMs. And it ended up, we needed to have more people to staff that at the time. And also all that capital investment, that obviously hits our expenses for sure, and needing more people. The other thing we saw, members were upset because they thought, you're replacing jobs. What is this machine? It's not the way that I'm used to interacting. So from those learnings, and that's when you said things that don't work, there's a long list, behind me of things that I've attempted or been involved with, or, advanced that hasn't worked, but it's what you do when you learn from it. So we course corrected that rollout and figured out the strategy being ITM only in our drive up. And then inside the lobby is where you get that kind of personal touch. And we've been able to have a substantial decrease in our total staffing levels. But I think what's even better is we have a much better career path for our teams, because it's less about having teller roles and needing to move up from there. You can start as a video teller and move up with very limited or no experience, to having a very experienced senior branch specialist or a branch specialist who's a lead that's doing consumer loans, opening checking accounts, helping business owners opening accounts, doing home equity loans and lines of credit, referring to our wealth management team, to our mortgage lending team, to our commercial team. So the growth trajectory someone could have by starting a career with us, early career, we have a great path there. And then for our members, they understand speed and convenience is out there in the drive ups. And I want to come in and see somebody in a friendly face. I come on inside. So since rolling all that out, our overall satisfaction for our branch segment is among the highest. When we look at peer benchmark, we use Member Loyalty Group, MLG. That's our highest performing segment. And that includes those ITM transactions. We also continue year over year, month over month, continue to see much higher levels of member growth through our branches, of product sales growth through our branches. So we're seeing a lot of really strong improvements. But that first, call it year, maybe two, it was a little rocky. But that is something where, looking back, just drawing that line in the sand would have been a better approach to say, here's what we're going to do, but more importantly, what are you not going to do? So we tried to do all things to all people in that rollout. And I think it bit us a little bit in the end. But the people really made that change happen, with our members through it.
Yeah, that's a long strategy that you did that really worked out, but obviously had a short-term dip. I agree. That's thoughtful. That's, by the way, very thoughtful strategy. That's interesting. In terms of marketing, Dave, since you also run marketing, right? What do you think is broken in the marketing ecosystem of an average credit union? What do you think?
That's a tough question. I don't know if we have enough time to go through all that, but I wouldn't say it's necessarily broken. I think we have how to attribute or track what our spend is generating back to the business, and we have that same problem, as well. You have pre-roll on video, you might do traditional television, you might do radio, you may do geo-targeted streaming services through Spotify or on podcasts that is trying to be hyper-targeted. Billboards, I also would say branches in one form could be looked at as a billboard, especially if you're at very trafficked, centers in town. But I think the issue a lot of marketers have, especially in the credit union space, because we deal with so many fragmented systems, it's difficult to attribute where somebody is coming in from that spend. And also, forgot social. There's a lot kind of happening. So we haven't cracked that nut, so to speak, yet. I think if I do, I think the camera we might flip, who's kind of doing the discussion here and helping people figure that out. But that is a big thing that, we are trying to figure out how to better attribute those successes. But, in the current day, my mindset is, allowing us to be in those different channels. You see it, you hear it, you drive by it, and then you hear about it from somebody in town. All those kind of funnel back in. And at the end of the day, what is our membership growth? And for us, our net organic membership growth, is that moving? And then any of our various campaigns that we have for product sales, once that campaign is launched to that audience, how much did we see from that audience in that specific product sale? So those would be kind of the two measurements that I kind of draw back to, is for our acquisition spend, how's our membership growth looking like for those channels that we can track, and then campaign performance for product sales. So that's where we're currently at today.
Makes sense. One last question, Dave. I know it's in the interest of time, you got a busy day. One last question is, if you would have to give Dave an advice 20 years back, when almost you started back at Baxter, what would that be?
I'd say listen. I feel I enjoy hearing other individual stories, and like I mentioned at the beginning, speaking to members and helping them solve problems. But I think in the work setting, people that you don't organically interact with as much, those that maybe are a
Sure.
bit more reserved, but most importantly, those that you might have a different opinion of on a topic, learn a little bit more about their perspective, because that is so valuable when you're able to understand, people's different perspectives. It's going to make an idea much better. It's going to make your implementation much better. It's going to help your change management process. It's just going to make you a much more well-rounded leader. So I think listening earlier on would have been something that Dave 20 years ago could have benefited from.
I think, it's not only you, Dave. I think, all of us, if you would have given ourselves the same suggestion or, advice, at least me 10 years back, I would have done much differently, and I would say better, right, over the period of time. But again, so this was a fun conversation, Dave. Again, thank you. Appreciate your time today. This was a fun time, and thank you, sir.
Thank you, Anurag. Appreciate the time.
Thank